So first of all, I'd like to thank you all for coming. This is my first slide. So I am out of the Mandarin office here in Jacksonville, Florida. We have in our own owners group, there are 4 offices and 3 of them are in the Jacksonville area. There's actually more than 3. They have one in Riverside, one down in Mandarin, and they have one in Orange Park. And then the owners also have one in Tallahassee and Panama. So they've been brokers probably for 30 plus years, and they don't need to work anymore, but they actually do, and they're really great at sharing their knowledge, and they have access. We have access to them, so it's quite nice that he's always teaching. And his name is Gene Rivers, and he's always on the national platform. Like, he's been requested to always speak at seminars and things like that. So I feel always honored when I'm reading a handbook or some sort of training. He's mentioned about 10 times in every training. So we have a great leader who's gone through it all, and he's done it all. And it's nice to have that as your backup in this industry. And Keller Williams as a whole is a huge, huge company. There's over 180,000 agents across the world, and we have access to network with all of them. So even if you own property or want to buy property in a strange area, more than likely we have an agent there that we can refer out, and that also helps us and helps you, because we vet them for you. We interview them for you and make sure that they would be a good fit for you no matter where you're at. So that's a beauty of being in a large company. And Keller Williams as a whole, they are the ones that have been the trailblazers for realtors. They've always made ways to try to help us, to help our customers and their training, and it's unbelievable. We are set to be trained and trained up, and so many agencies, they don't train their people. They just let them get their license and then throw them out there. And so the beauty of being with someone in Keller Williams is that they've been trained. Not all of us are made the same, but we all have a good, strong base. And if the people who have joined Keller Williams study and do all the training, you're in a better situation for that. So let me see if I can figure out how to move my slides. I never know how to do this. Sorry.
And if I may, real quick, Nicole, just to speak on that real quick, Prentice, a lot of people hear, huge company, and they think that, oh, I'm going to get lost in the shuffle, or I'm just another number. I prefer to look at it the other way around, as from the standpoint of when you're working with a larger company, it gives you access to more resources in personnel, technology, and so forth. And then Nicole kind of stole some of my thunder, because I was going to speak on the fact of training. Because a lot of agents that are brokering or at smaller companies, most of them started out at Keller Williams or at Watson, those places, because those companies are going to make sure that you are well trained. And the reason is really more so they're protecting their brand, even more so than making sure the agent is fully trained, because they have a bigger brand to protect. So just wanted to kind of speak on that, and that I always look at bigger companies as an advantage, not a disadvantage. Not that smaller companies don't have resources, not that some big companies don't treat you like a number, but I always look at the positive on it. And then you're working with Nicole, so you're working with the best. So, all right, I'll put myself back on mute.
Thanks, Barry. Well, I am also a licensed real estate agent, but I'm also a degreed interior designer. I'm certified home stager. I'm also a homeowner, which makes a difference. There's some agents out here who've never purchased their own home. I am wonderful at customer service, and I'm a great community contributor. So I'm a mother, I'm a wife, and I have lived in Florida now since 2014 by way of Canada, but I'm very familiar with Michigan because I lived in Detroit as well. So it's a thing we do have in common, Prentice. My daughter was born in Detroit, right there. It was it St. John's, right off of Bernier. So I'm familiar with Detroit. Owned a house there too. Okay, so what do you want to learn about the home buying process? Today, we're going to go over fear versus facts about buying a home, the realities of our market today, 6 simple steps to home ownership. We're going to talk about financing and then what you want to do after you learn all those steps. So here are fears versus facts about buying a home. A lot of people have this fear. It says, I can't afford to buy a home right now. The fact is, until you do the math, you don't know what you can afford. You have to actually calculate your income and calculate the cost of your rent and see, well, if I'm paying rent, why can't I afford to pay a mortgage? So you don't know if you can afford a home until you do the math. Another fear that people have is, I should wait until the market gets better. Well, the fact is there's never a bad time to buy the right home. Even if interest rates are higher, even if the prices of houses are higher, in the long run, you are throwing money away if you're paying rent, and it's not going to your asset. It's not going to your equity. It's not going to you at all. Fear, I don't have the money for a down payment. The fact is there's a variety of down payment options available to you. And even Barry will tell you about some of the assistance and the programs he offers. But right now, you can buy a house with as little as 3% down. So keep that in mind, 3%. A lot of people think it's 20, but it isn't, it's 3. Fear, I can't afford to buy my dream home. The fact is, the best way to get closer to buying your dream home is to buy your first home. You buy one home, and after a few years, it builds up equity. You take the equity out and buy another home, or you sell that house and use the proceeds from that house to buy the next house. You don't have to stay in your first house forever, but if you don't get one, you're never going to have anything at the end. So I always say it's always a good time to buy. Fear, I can't afford to buy a home because my credit isn't very good. Fact is, there's always options. There's rent to own programs. There are some credit scores that aren't great, but there are ways to start building them up. But you have to know what your credit is in order to even know if you qualify. So at least learn. And they say that knowledge is power. Well, guess what? It is. Because if you don't know, how will you ever move forward and improve it? Fear, I should wait until I'm certain about my domestic future. The fact is, you don't have to wait until you're married or partnered. You can buy a house being single, it doesn't matter. And if you don't have kids, it doesn't matter. Whatever situation you're in, it's just an excuse. It doesn't matter. Fear, buying a home seems way too complicated. The fact is, no one ever says that buying a home is easy, but guess what? If you have the right partnership, it's much smoother process. Someone guiding you and helping you through the whole process, someone like me, someone like Barry, it makes this process easier and palatable. Fear, I should pay off my student loan debt before buying a home. The fact is, student loan debt does not prevent you from buying a home. There are some debts that will, but that one isn't one. So don't use that as an excuse. So right now, our interest rates are on the rise, and they're at around, is it 6.25, Barry? Give or take? Yeah, okay. So our long-term goal is to build equity. So the longer you own your home, the more appreciation you'll get, and then your debt gets paid off. So you put a little bit down here and eventually you can see your equities rising up in your house. And then at the end, what do you have? You have stability and security, a sense of community, freedom to customize, you have tax benefits, and you're building wealth. This is a great foundation to building wealth. The house I purchased was a brand new house back in 2017. And it already has $150,000 equity. I don't even want to look at my investments in the stock market right now because I know they're going down and plummeting. So I'm not even looking. When the statement comes, I don't open it. I don't want to see it because I know it's not growing. I know it's going backwards. So not to say that real estate's always going up, but just don't sell it when it's going down and you'll be all right. So owning versus renting. If you purchase a home for $250,000 and pay $1,200 a month towards your mortgage, over 30 years, you're going to have paid $435,000. You own an asset has grown in value well over this amount. That's how much you paid, but that house is not worth that. It's worth way more than that. Now, if you're renting, you pay $1,200 a month towards your landlord's mortgage. A total over 30 years, you're paying $432,000. And what happens at the end? You own nothing. And that's assuming your rent never goes up. Well, the truth is, rent is going up so crazy right now. I have rent anymore. I had to get another job. I had to rent a room out because I can't afford it. It's a serious thing. When you lock yourself into a mortgage, that mortgage doesn't go up. You're locked in. The best case scenario is it's going to go down because you can refinance it. You can make extra payments and attack your principal. Therefore, at the very end, you don't owe as much. That never happens with rent. No one ever says, oh my gosh, you're such a great tenant. Let me take your rent down. When has that ever happened in your lifetime? Never happened to me. Never. Has it ever happened to any of you? Probably not. It goes up. It never goes down. It's what it is. So why hold off buying? Well, there are reasons. It's not always a good time to buy. Maybe you just change jobs. Maybe you're working with a new company. It's a whole new career. Sometimes changing jobs is okay if it's a similar career, but if it's a completely different career, it's not a good time to buy. They're always looking for a long-term style of income producing job. Financial, okay, your credit score may be low and you may not have a down payment. Those are two reasons why you have to hold off buying. It's too expensive. Well, that can be true if you want, a really, really nice house and it's not within your budget. You have to buy not as nice house. Short-term ownership. Perhaps you're considering moving and you shouldn't buy in the city that you're living in currently. That is a reason not to buy unless you think you're going to keep the house and rent it out. But there are reasons not to buy, and those are 4 of them. So the realities of our market right now, in Jacksonville, the houses have gone up a lot. So the average home price is $350,000. But don't be scared. There are still houses out there in the hundreds and in the low 200s in every price range. So don't be scared. And our interest rates are at 6.25 right now, but considering they have been into the 18% range, 6.25 isn't bad. You lock that in, and in a few years, if things go down, you refinance. So don't be terrified with the interest rates being hiked up. Right now, we are still in a seller's market. That means there are more people that need a house than there are houses to buy. That means the sellers control the pricing of the house, and the way they control it is if they're not willing to sell it, people are going to start throwing more money at them. So the prices will start going. And that's exactly what's happening. Even though I've been seeing a slight slowdown, it's not a real slowdown. Instead of a house selling in 2 hours, it's taking maybe 2 days. That's not much. It's still really crazy. And there's still multiple offer issues. There are still people having to pay over list. So it's still a seller's market, and our community is on the rise. We have grown over 30%. We still don't have enough houses for people. We just don't. And I'm okay with that. The builders can't help it that they can't build fast enough. They can't help it that they're not getting the equipment and all the supplies they need. They can't help it if the people that they're hiring to do the work are getting exhausted because they've been working, 50 and 60 hours a week. I mean, people died, and it could be a lot of these tradespeople. We don't know who died, but we know 1 million Americans have died. So it's going to affect everybody's market, and it's a global thing. So it is what it is. We can't do anything about it. They're doing the best they can as far as new home construction by kind of controlling how they're building, how many homes they're releasing at a time. And they're actually pre-building everything. It's a spec home. It's rare now to find a custom home. If it's a custom home, it's more likely in the $1 million range, and it's not in most people's price range to buy $1 million house. Those are the upper 5%. So these are the 6 easy steps to home ownership. 1, you hire your agent. 2, you secure your pre-approved financing. 3, you find your home. 4, you make an offer and we negotiate. 5, you get your home inspected and we negotiate for repairs. And 6, we close on the house and you become a homeowner. Those are the 6 steps. Now let me just do a little commercial. I have an app here, and it's called the KW app. You download it on your phone. It has real-time information about your transaction. You can search for houses. You can narrow it down to neighborhoods and know what's going on when there's an open house. It's very hyper local, so you can literally pick streets if you want to learn about houses just in a certain subdivision, certain area near schools. It's a great app, and it's absolutely free to download it. And then you can save your collections. I can see which houses you like, and when you're ready to go shop for homes, I can absolutely see what you're interested in. So I suggest that you download my app. It's right here, and I can send you a link if you want one. I will send it to your phone. So step 1, hiring your agent. As a buyer's agent, I educate you about the market. I analyze your wants and needs. I steer you to homes that fit your criteria, and I coordinate with the work of other professionals. I also negotiate on your behalf, and I solve any problems that may arise. And trust me, there's usually problems, and I'm on it. As a buyer's agent, I ask you to sign a buyer's representation agreement. That's an exclusive agreement that you're promising to work with me solely, and I promise to be committed to work with you solely to help you find exactly what you need in your home. So we're committing our work ethic with each other. So I ask that to be signed. And then when do you hire an agent? You hire an agent when you're ready. When you're ready to start working with me, your finances are in order, then we go for your pre-approval. Then we start looking for homes. Once we find one you want, we write a contract, we get under a contract, we take ownership, you move into your home, and then you make your last rental payment. So that is how it works. Step 2, secure your pre-approved financing. Guess who's on set now? You ready, Barry? Okay, get off mute and start talking.
All right, so this is when the fun part starts happening. Now, first thing I wanted to mention is, as far as Nicole, you're mentioning hiring your agent. And, typically when people hear I'm hiring an agent, first question is, okay, do I have to pay you? Do I give you a deposit? Anything like that? The answer to all of that is no. You as a buyer do not pay your agent anything. The seller is who pays Nicole in this case. So absolutely nothing comes out of your pocket that goes to the agent themselves. So the seller is appreciative of her bringing you to their home. So they foot the bill of compensating your realtor and Nicole for their time. All right, so just had to touch on that really quick because I know that was one of my questions when I was buying a home. And once she said that, I'm like, okay, well, let's roll. let's start looking for a home. So as far as the difference between a pre-approval and a pre-qualification letter, as you see before, a pre-qualification letter, anybody can give you that. That's just strictly a piece of paper with your name on it saying, hey, they're pre-qualified to get this much. It can be based on a conversation. It can be based on an application with no documents. Or it can just be simply based on a realtor saying, hey, Barry, I got somebody that wants to buy a home. They don't have time to put in an application, but I trust them. I know they can qualify for $300,000. And I say, okay, here it is. But it doesn't have any teeth behind it. And realtors know that. Anyone that with any type of experience knows that based on just those terms, pre-qualifications. Now, a pre-approval, that's done with, of course, an application where I've checked your credit, I've seen what information you've input on the application, and then more importantly, I've received documentation to support the income that you put in, the assets that you entered, and then ask a lot of other questions that may come up. I've been doing this for over 10 years now. So with experience comes a fine-tuned ear. So I know that when I see certain things or hear certain things, I know, okay, hold on, you mentioned this, so let me dig in a little bit, because that pre-approval is basically, I learned a long time ago, me issuing a pre-approval letter is basically me writing a check or giving a blank check to, well, not a blank check, but a check to my buyer on behalf of my company and saying, yes, I vouch for this person to give them $200,000, $300,000. So this scenario I always give folks is $20 at your job. If someone walks up and says, hey man, I'm a little short for cash, I need to get something for lunch, let me borrow $20. This is someone that you know to some degree. If you give them those $20, either directly or in your head, you're thinking, okay, when am I going to get my money? He's going to give me 2 10s. Am I going to get 4 5s? Is he going to bring it to me, or am I going to have to go get it? And this is just $20. So now we're talking about hundreds of thousands of dollars. So we owe it to ourselves to do our due diligence. So that's just to circle back to pre-approval versus pre-qualification. And in the end, it's always to help you as a buyer. I have a strong policy that I don't put any of my buyers in a position where they're going to spend money that they cannot get back. So if I see any gray area, I'm not issuing a pre-approval, because even if it's a situation where something happens and you get your money back, when you sign a contract on a home, mentally you are moved into that home. You are already setting stuff up. You're like, okay, I know I can't go buy any furniture yet, but I'm window shopping. As soon as I close them documents, I'm heading straight to Havertys. I'm heading straight to Ashley's, and I'm going to get that furniture. You're spacing it out. So if that loan does not close, especially due to something that we could have prevented up front, then I take personal responsibility for that. You know, because it's not just, oh, this one didn't go through. No, you've invested emotions into this, and now it's not coming to fruition. So that's the importance of making sure you have a solid pre-approval versus a pre-qualification. Some lenders will, some people will say, well, it has to go to underwriting first. Like I said, I've been doing this for over 10 years. We don't hire anyone without experience. So if someone has 2-3 years on the same job, bank statements look good, any loan officer worth their salt should feel confident enough in saying, yes, this is a solid pre-approval, not I gotta go ask the underwriter. Typically, if I'm asking an underwriter a question, it's because I know the answer, but it's not the answer I want. So I'm looking for something different. So I just say that to say that's kind of, sometimes it's company policy, but here at CMG, we empower our loan officers to know that, hey, look, you are an expert at what you do. So if you say this person is strongly qualified, then hey, send that pre-approval. If it's something with self-employment income or some things that are sketchy, and I'm not sure, then yes, I'm gonna go ahead and do that, because again, when I say go, here's your pre-approval, I want you to go with confidence. All right, you can go to the next one, Nicole. And very important, choosing a lender. Of course, as for referrals, as mentioned, interview them, choose the one that you're comfortable with, prepare the loan application, get approved, determine what you need to pay and select. That's kind of the bullet points. In the end, it's all about who you're comfortable with, who you know is going to close the loan. One advantage that I say I have over a lot of companies is I'm right here in this city. I live in Jacksonville. I go to the same grocery stores and shopping malls that you go to. And I say that because as opposed to going with, I don't mind calling names, Rocket Mortgage or any of these companies where you have someone in California or somewhere else in a call center, if your loan doesn't go through, it's nothing. It's barely sweat off of their back, because one, there's really no strong accountability, because their company is sending 10 more for your one that did not close. And it's someone you will never see again, never see, let alone again in your life, as opposed to with a local loan officer. Being local brings on a certain amount of accountability and responsibility, because again, one, I have to walk these streets. Two, everything I do is based on my name and my reputation. Especially in this world with so much social media, everyone's going to always broadcast the bad before they hear the good. Case in point, VyStar is having a little issue with their online account. Now, some of these people have had great mortgage rates with VyStar, all of this and that, but they never say, man, VyStar gave me an awesome 1% interest rate. Oh man, VyStar waived my overdraft fee. But now it's a situation where you have access to your money, you just can't see it online. You can still, now everybody's blasted. So, and it's always been the nature of society. Now society has a lot more access to broadcast how they feel. So that's something that I have to be mindful as well, because it's all about my name, my reputation, my brand, as well as getting you into a home. But because I'm local, it impacts me more when a loan doesn't close. It makes me feel better when a loan does close, because I'm having a hand in investing in my community. As far as CMG as a whole, we are actually the largest private held lender in the country, and even in this area. After the major banks, your Wells Fargo, Bank of America, and Chase, CMG is right there. So we're not a small mom and pop shop. We are a major corporation. We've been here in Jacksonville since 2013. and we are real purchase heavy. We're not, a big refi company where we churn and burn. Our main focus is putting people into homes. And then we're not a broker, we're not a bank. We are what you call a direct lender, meaning all we do is chicken. We don't do checking accounts, we don't do 401ks. All we do is mortgages. So what that does, it makes us a little more hyper focused on making sure it closes. Makes us better than banks because, truth be told, Prentice, banks really don't want to do mortgages. It's not their top priority. They make their money off of bringing in deposits, not giving money out. So for that reason, that's why they can say, look, you got to have a 660 credit score, even though FHA says you can have a 580, because each individual company has the ability to say, well, I know we can go this low, but we choose not to, and that's their right. So because mortgages are not their top priority, they have the ability to tighten their windows so that when they are doing one, they know they're dealing with what we call grade A customers, really clean credit, good assets, good income. So they have the ability to be picky. And because they have that ability to be picky and they're not doing as many tough loans, guess what? They don't have to hire top-notch loan officers. They can basically just hire phone jockeys or someone to sit in the chair and just put in the numbers, spit it out, and it goes through. So in most things, you get what you pay for. So if you're paying a loan officer minimum wage, a little small commission, either A, they're going to give that amount of work, or that's the best that they can do. Because any loan officer that's worth their salt, they realize, hey, I'm better than this, so I'm going to leave. So those that stay there, typically, they're maximizing their potential, not to mention the fact that when 5 o'clock comes, they're out of the office. Me, Nicole can tell you, as long as I got this phone in my hand, I'm working. I have the gift and the curse of not having a time clock. I can, and some people think, well, man, if you're self-employed, you can, man, you don't have to work. Yeah, I don't have to, but I need to. So I'm always working. Thankfully, my wife is my loan processor, so we work together. So that gives me a little extra leeway. So when she sees me always on my phone, she may take a deep breath, but she knows, okay, this is what he does. So, and then we're not brokers as well. The difference between a broker and a direct lender, everything is done in-house. I work for CMG. My processor works for CMG. The underwriter works for CMG. The funder, the closer, every single person that touches your loan is an employee of CMG. So nothing is outsourced. People say, well, do you have a lender that can do? No, we are the lender. Everything's right here. So that helps build relationships. So I know the people that are working on your loan. I can pick up the phone, call them. They get to know my family. I get to know theirs. We work in the same office when we were all in the same office. And then we actually have the ability to pick which underwriter reviews your loan. So if your situation is maybe self-employed, we say, okay, who's really good with self-employment and who can, I don't say finesse it, but who can make these numbers work. Then we say, hey, we want this particular underwriter. So it's not just, hey, it's just a round robin that goes to whoever. We can pick the team that works on it. And for the most part, we have a set team. The same people we work with on almost every loan. So that builds camaraderie, that builds continuity as a team. Brokers, on the other hand, you got a middleman who's basically just saying, okay, I got this. Now I got 20 different lenders I can access. But here's the thing, I've been a broker before. If you find one person that, for instance, we're all brokers. We broker ourselves out to grocery stores, to gas stations. You got access to 20 different gas stations. I guarantee you go to the same gas station every time. You either use BP, you always use Shell, you always use Gate. You're not, well, now with these gas prices, it might be whoever has the cheapest. But for the most part, with most of the things we do, grocery and so forth, although we have a bunch of options, once we find the one that works for us, that's who we use. So that's why when brokers say, I got 10, 20 different lenders I can work with, once they find one that works for them, they're going to that same one. So it's not like they're actively shopping every single time. The only time a broker becomes necessary is if you're doing like an out of the box loan, like you're doing something where you're using bank statements instead of pay stubs and tax returns, or you're trying to do something outside of the standard FHA, VA, conventional, or USDA loan. As long as you're doing those loans, there's really no need for a broker at all, because we all play within the same sandbox. And then the plus is we're basically a hybrid, because in those situations when you need something out of the box, we have some of those products in-house, and I do have the ability to broker certain things out. So for the most part, we're a direct lender, but if I need to put on that broker hat, I can as well. So those are just some tangible reasons to choose a lender. You notice I didn't say, oh, I can go this low on a credit score, or I can close your loan in 25 days, and oh, I got the lowest rates. Everybody's going to say that, but I'm always focused on the things that are going to separate me from the crowd. All right, and then next we're talking about pre-approval perfected, which is you can apply directly and digitally, and it simplifies and expedites the process, and that is the absolute truth. Nicole and I have an app that we share. It's called the CMG Home app. And what it does, it puts the ability to apply right in the palm of your hand. It's along the same ilk of the real estate link that she showed, where you can just do everything. Same thing with the loan application. We send you a link. You see both Nicole and I's picture on it, and right in your hand, you can complete your entire loan application. Just as a footnote for privacy purposes, I'm the only one that sees the application and any information you send in. But what that app does, it connects us from a communication standpoint. Because one of the things a lot of people say is, I want to know what's going on. I don't know what's going on. That app, when your loan is approved or when your appraisal is ordered, you find out almost the same time that I do. So you get real-time updates. The app even has an option where you can use your phone as a scanner as well, because everyone doesn't have a scanner. Kinko's and the UPS store, they charge like $50 just to fax 2 sheets of paper. So this gives you the option of just turning your phone into a scanner, getting documents over to me securely. There's a mortgage calculator, a whole lot of other bells and whistles as well. And then I think that's it. It's just the best thing since sliced bread. I haven't seen anything like it. There's even a chat box where you can just chat, and I, and Nicole, and starts a group chat with us as well. All right, so one of the first questions I ask people is not what side of town you're looking on, what type of house do you want, what purchase price are you looking in? Reason being, I don't sell houses. I sell money. I have absolutely nothing to do with houses, and I know how to stay in my lane. What I do is I sell money. Money's still relatively cheap. So one of the first questions I always ask buyers is, what do you want your mortgage payment to be? And it throws them off. And they're like, because it's a valid question, because there's a difference between what you can afford and what you want to pay. What you can afford may be a $500,000 house, but what you want to pay may be a $250,000 house. So once I determine that target or max number, that allows me to say, hey, based on the amount you're talking about putting down, this is the price range you need to shop in order to keep your payment where you want it. And that makes things extremely efficient for both you and Nicole. Takes away a whole lot of frustration from you seeing a home and you're like, oh, I like this house, Nicole. What's the payment on it? And either Nicole runs the numbers, or you run it, or you check with me, and we say, and I tell you the number, and it's like $400 over, and you're like, oh man, and you're like, why is she showing me these up? Sometimes it's because that conversation hasn't been had about where I want my payment. Now, on the flip side, because a lot of lenders will say you pre-approve up to 400,000, but I don't want a $3,000 mortgage payment. So why even send out a pre-approval letter showing that? Now, what I will do though, if you say, just spitball, if you say, hey, I want a mortgage payment no more than $1,500, I'm gonna say, hey, you're looking at roughly about $225,000 on the home. That's where you need to shop. But if I see based on the information that you can qualify for 250, 275, I will let you know, because Murphy's Law always prevails. That home that you're looking for that has everything that you want is going to be 10,000 over that target range. But I'll let you know ahead of time, hey, if you do see a home up to this amount, you can get it. And then it's not a matter of can I make an offer, is am I willing to pay an extra $100 a month for this house? And notice I say this house, because there's a house out there that you'll stretch your budget for, and there's other houses that, no, I'm not going to stretch my budget for that. So that's always my conversation, is I position in at the crux of everything is your payment. Because when you write that mortgage payment, you don't put a purchase price on it, you don't put an interest rate on it. Interest rates are just something to brag about at your barbecue. What you put on there is a, oh my God, not purchase price. You put a dollar amount on there. So that's always my focus, that bottom line dollar figure. And then understanding mortgages, down payment, as Nicole mentioned, you can technically put as little as 3% down. That's on a conventional loan. FHA, you can put as little as 3.5% down. If your home is in an area that's deemed eligible for USDA, that's typically rural areas. Right now, there's nothing USDA wise in Jacksonville. Nod your head if I'm wrong, or shake your head if I'm wrong. Like Clay County, Middleburg, that's where you'll still see some homes that are eligible for USDA, right in St. John's and the St. Augustine area. But you can do 0% down there. And just a side note, on a USDA loan, if you're interested in that, you can actually roll your closing costs into the loan. Something a lot of people don't know. That's the only loan that allows you to roll in your closing costs on a purchase. And then VA, if you're a veteran, if God made anything better than a VA loan, he kept it to himself. There's no down payment required, plus it waives a lot of other things. Were you saying something, Prentice? Oh, I thought you was saying something.
No, I was just reading where it says understanding mortgages, like the 3 decisions as far as the down payment, how much, the interest payment, at what rate, and then the term of the loan, whether it be the 15 to 30 years or whatever options are available.
Yes, okay. And then something I always say, I'm not talking at you, I'm talking with you. So at any point, jump in and throw out a question. So by all means. Now, as far as interest rate, and I'm going to speak directly to where we are now. People say, oh man, rates are high. My automatic response to that is, compared to what? And then I shut up and I wait for their answer. And typically it's, well, a year ago or 5 years ago when my cousin bought her house, or, and I have the same response every time. 5 years ago, I was 10 pounds lighter. If I can't control my weight, well, if I choose not to control my weight, I surely cannot control the financial market, because that's what interest rates are tied to. Rates will fool you. For one reason, if you're looking at interest rates it's a function of your payment. That's correct. But if you have a lower mortgage, that interest rate doesn't have as much impact as it does on a higher. And then you can manipulate that rate by doing simple things. The easiest thing is making bi-weekly payments. So if your mortgage payment is, just for the sake of even numbers, $2,000 per month, instead of paying $1,000 at the first of every month, all you do is you pay, instead of paying $2,000 every month, what you do is you pay $1,000 every 2 weeks. And then what you end up doing is making, instead of 12 payments, you end up making 26 payments, not 24, but 26, because you know, if you are, or if you have worked a W-2 job, you know, every now and then you get that month where you get an extra paycheck. Reason being because there's 52 weeks in a year. So what ends up happening is you have those extra payments. So that's the equivalent of one extra mortgage payment per year. And what that does, by paying the same thing instead of $2,000, but splitting it up, you end up cutting between 4 to 6 years off of your mortgage, depending on what the rate is. And what that does, it gives you what we call a net effective rate that's actually lower than what your rate is. So right now, taking 6.25%, if you locked in, closed on a home at 6.25, if you started off making bi-weekly payments from the start to finish, one, you'll pay your home off lower. Two, that means that you're paying less interest, because that's on average 5 years that you're not making payments. So based on an interest standpoint, you're paying about the same amount of interest as someone with maybe a 5% interest rate. So that's why I say you can make your rate whatever you want. Numbers can be manipulated. So that's why I say interest rate is something for you to brag about with your buddies at the barbecue. And then I was talking with a colleague, and he's like, when someone says, what's your rate? One, your rate, my best rate depends on your best, because it's always going to be based on credit score, size of the loan, amount of your down payment, sometimes even the type of home that you're buying. Specifically condos, they get typically higher interest rates. Manufactured homes get higher rates. So those are things that impact your rate. And then the biggest thing to be mindful of is, what are you paying for your rate? Because I used the example of gas stations before. You see 3 gas stations on the same strip or within a block of each other. 9 times out of 10, they're all going to be around the same, about the same price, maybe a 2 to 3 cent difference at the most. But if you see one gas station that's 10 cents lower than the rest, me personally, I'm going to say, why is their gas lower? What are they? Are they cutting it with kerosene? Or do they got water in the gas? How are they able to provide gas 10 cents lower than all of their competitors that are within walking distance of each other? 9 times out of 10, something in the milk isn't right. And it's the same thing with interest rates. You call 5 different lenders and they give you a rate, they're all going to be around the same ballpark. But if one gives you a rate that's even half a percent lower or more, what they're probably doing is incorporating extra fees that give you that lower rate. So it's always about apples to apples. So when you see interest rates posted online, I get that, well, I saw what rates is this. When you see rates posted, they're based on a cookie cutter scenario. It's based on 20% down, typically $250,000 loan, and credit score of at least 740 to 780. So anything in your scenario that's outside of that ideal scenario is going to alter that interest rate. If your score is in the next tier down, your rate's going up. If your down payment is less than 20%, the rate's going to go up. If you're buying a condo, rate's going to go up. Even if you have a lower loan amount, some mortgages, for lack of a better term, they penalize you for getting a lower loan amount. And people say, why? They're going to make less money on, if they're charging 4% on a $200,000 loan and 4% on a $100,000 loan, they're going to make less money on that $100,000 loan. So you're automatically going to get a higher interest rate. And that's on some mortgages, not all. I know conventional for sure will do that. But just to kind of enlighten you on some things about interest rates, and then as far as the term, how long, average first-time home buyers getting a 30-year mortgage. That's kind of always the route. But we're setting it up for 30 years, but you can pay it off anytime you want. Just like I mentioned, just by doing something like bi-weekly payments, that's already cutting about 5 years off your loan. And I'm not going to say it's just us. I don't know any mortgages or any mortgage companies that are charging prepayment penalties for that. So that's just kind of not the norm. Every now and then I run across somebody say they saw something with a prepayment penalty feature, but that's something you really don't have to worry about. It's almost not allowed on most mortgages right now, because after the mortgage crisis, almost everything mortgage law wise is geared towards protecting the buyer. I have to take an annual course and have to test every year to renew my license. And when I talk to people who are new and they're taking the test and they're like, oh man, I say, hey, whenever you're in doubt about an answer, just pick whichever answer is best protects the buyer, because that's what everything is geared towards, protecting the buyer. All right, so now we're talking about monthly mortgage payment. That's what it's all about. And your payment is breaking up into 3 parts. You have the principal, which is the actual loan itself, the interest, then you have taxes and insurance. Now, principal and interest, that will not change ever. Even if you make you get a big bonus or something. So I'm going to put $5,000 towards my mortgage. Your mortgage payment will still stay the same. All you're doing is putting yourself in position to pay it off sooner, because that principal interest will remain the same. And what you're going to see is it's a correlation. The first few payments, most of your payments are going to go towards interest. That's just the way all lending works of all type. But each month, a little bit less goes towards interest, a little bit more goes towards principal. Then typically right around year 10-ish or so, they kind of meet right here. And then that's when you start winning. More of your payment is going towards principal, less is going towards interest. And then that's when you're done making jabs at that mortgage. You're throwing body blows at it now. You're throwing haymakers. Taxes and insurance, that's where things get a little tricky. Those will fluctuate a little bit each year. Taxes, not so much, because thank goodness we have the ability to homestead our taxes. When you close on your home, title company will tell you about it. I'll tell you about it as well, where you're declaring that this is my primary home. After you've done that, what it does, 2 things. One, it reduces your taxes, because whatever the value of your home is, it cuts, think about $50,000 to $60,000 off the value. So you're taxed at a value lower than what you would. So your taxes go down. And then also it caps the fluctuation. Your taxes can increase by no more than, I want to say 3% each year. So that way, even if, like, especially right now, with home prices just skyrocketing, people who have rental properties or vacation homes, oh man, they're taking it bad, because their taxes are just shooting up because they don't have that protection. But those that have been in their home and they've homesteaded, I don't care if my home value goes from 100,000 to 800,000, my taxes cannot increase by more than that increment each year. So it keeps it steady. Insurance, totally different ball game. I was just watching the news this morning when they're talking about, insurance companies trying to, increase rates. That's the one thing that can change the most. But the beauty is you can shop it around from year to year. You can shop it around every month if you want to try to get the best rate possible. Taxes, you're stuck. If you're in Duval, Clay, or whatever, that's what your taxes are going to be. But insurance, you do have the power to shop around and kind of control that as much as possible. So that's the basic breakdown of your payment. You may have mortgage insurance, depending on the type of loan you're doing, and you may have HOA dues, depending on if you're in an association that charges those. So down payment, we talked about that. That can range between 3% to 20%. 20% isn't always the best route to go, believe it or not. I've actually showed some people, hey, instead of putting 20% down, let's put down 15% to keep yourself a little more liquid, and let's do some creative things. You may still have mortgage insurance, but we can do some things with it. So that way it's not as much on your bottom line payment. It's going to go away relatively quickly. And then also you're keeping another 5% of your funds in your pocket. So it's all about the numbers. My job, Prentice, I always say, I do not make decisions about other people's money. That is not my job. My job is to make sure you know every option available to you, the advantages and disadvantages of every option, and let's then say, hey, which one works best for you? As far as where funds will come from, it can come from a variety of places. Of course, your own checking and savings, any 401k retirement funds that you have, gifts from parents as well. There's even some loan programs where your job can give funds towards your home as well. And then, of course, I do have access to a number of down payment assistance options. Some are for first-time home buyers only. Some you don't have to be a first-time home buyer as well. And their amounts can range anywhere between $10,000 up to $50,000 in assistance for your home. I'm never one to say, give me a call, I can give you $50,000. Give me a call, I can give you this and this and that. Because, man, it's like I got a better chance splitting an atom almost than trying to just tell someone everything about the down payment assistance options, because there's so many different variables and conditions. So what I have learned to do is say, hey, I have down payment assistance options that range from this to this. Once I get a full look at your credit profile, your income, all of those things, then I can say, hey, these are the ones that's available, because I never want to come out looking like a bait and switch loan officer and saying, well, I can get you this. And then you give me a call and we do everything. Well, I can only do what do. You told me I called you because of this. And even though it's legit that I can't offer the ones that I told you about, I try to avoid that and just say, hey, trust that if it's available and you qualify for it, I will let you know about it. But there's money out there, my friend. All right. Most people say this is common sense, but my wife has a phrase that common sense is not common. So you'll hear this. Don't do anything huge. Big purchases, more so for the standpoint it's going to impact the assets that you have. Definitely don't pull any new credit. Now, one thing that people think, well, are you going to pull my credit again right before closing? No, lenders do not or should not be doing that. If that's being done, somebody on the lending side did something wrong. And I'll just kind of keep that short and sweet. No job changes. Definitely once you found a home, don't change jobs at all. Like Nicole mentioned, there are some situations where changing the jobs will not hurt, but there's some where it can, especially if there's a repeat history of changing jobs, because it does show instability. But I always say, if you're thinking about doing anything, give me a call and I'll say, hey, thanks for letting me know. We can make it work, or thanks for letting me know, stop what you're doing, don't do it. And then protecting your down payment. Of course, the biggest thing is don't move money around. People have a habit of shifting money. Every time money shifts, if we see $10,000 in your bank account, but we see a deposit for $5,000, we got to say, hey, where'd that money come from? So now you got to provide a statement that it came from. If we see deposits going into that one, we got to source that as well. So we got to source all money involved in the mortgage transaction. Cash is king, except for mortgages. Cash is not king. Cash is the enemy of mortgages. Cash out. I tell folks now, man, if you do have a whole lot of cash app activity, just have it go in a separate account. The best thing is to have that account that you're going to be using for your mortgage to be as stable as possible. Not that things can't be verified, but I love a smooth and easy process, my friend. So, and you find your home. That's really typically the hardest part. If I've done my job of making sure that you're completely qualified, especially in this market, that's really I don't want to say that's the next step. I'm not really even trying to handicap people saying it's hard or easy. Finding a home, finding a home that's right for you. And then as far as time frame, once you do find your home, you can actually go to the next one, Nicole. People say, oh, how long does it take? One, we can get you pre-approved in 24 to 48 hours, as long as you get your documents in. Get a pre-approval letter out to you. Then from there, once you find a home, you're looking at closing in 30 days. So for folks that saying the loan process took 2 and 3 months, they weren't working with me. So I'm gonna leave that there. Defining.
Well, Barry.
Yeah, that's you.
Guess what? Now it's my turn.
Yeah. As soon as I told you I stay in my lane, Prentice, but I saw defining your need. I don't sell houses. So.
Do you have any questions for Barry at this time, Prentice?
No, what I tend to do is just make sure that I'm paying attention, and I probably jot down a question in my notes. I am familiar with the process, and my wife and I, we have been homeowners before. We've had investment properties, but when the market crashed, either we lost homes or we were able to sell the homes, like quick claim deeds, things like that. And Barry, just a brief summary about myself. We're originally from Michigan. Recently, not even recently, but we moved to Jacksonville, Florida back in December of 2021. And so I'm a school teacher for the Duval charter at Bay Meadows. My wife, she's a social worker. And currently, we know that our credit is a little shaky just because we had to make that transition. So we use credit cards and, almost exhausted our funds, but we were both blessed to have jobs. So it's gradually increasing back up, and we're paying off like credit cards, her credit cards. I'll help with her, she'll help with mine on off weeks and things like that. And so we're looking in the next 4 to 5 to 6 months to purchase. Now we are currently renting, but I know renting is putting a profit in another person's pocket. I get that. So I'm all about keeping it in my pocket. And so that's where we're at. And it was a blessing I see a lot of real estate agents. I've met a ton of people, like they passing out business cards, and I see different little advertisements as far as in gas stations. And I might take a card or take a phone number down, but it's nothing like working with someone who has your interests at heart. And so the father of 3, my son, he attends Jacksonville University. This is going on his 5th year. And my daughter, she works for BMW. My oldest daughter, she works for BMW. And my youngest daughter, she's 13. And so I just want to leave that positive legacy for my children. And so that's why I'm interested in purchasing a home via renting. And so I know I'll probably be renting for the next I'm not even going to say possibly be renting, because I don't know what God has in store for me tomorrow. And so we'll get it all figured out. I want to get these and one of my questions was about the student loans. The student loans is so high. And so I went to college for engineering. So I have a engineering background, but I have my master's in education, but I never got an engineering job, but I owe engineering money. So I don't know. And so I know I'm looking into other programs to offset those that bill. And it's just a lot right now that I'm trying to do, but I have to keep my brain moving. That's why I said, well, and I even lost Nicole's card, but I seen where she had sent me an invite. And man, I'm combing through emails Thursday night. I was like, man, I know this event is coming up. I can't miss this because I need to learn what I need to do in order to be successful on purchasing my next home.
Awesome, awesome. Real quick, you're already fulfilling that purpose of continuing the legacy, just based on what you mentioned about your two older kids. One seems to be working for an awesome company in BMW. Another one is in JU right now. Looks like he's on the tail end of college. So they're already on the verge of doing even better than you and your wife, which I think is our mandate as parents, to make sure our kids are better. 13-year-old, hey, you still got a few more. Hey, I still got a 10-year-old at the house, so I feel you on that one.
She keeps me grounded.
Yes. But as far as the student loans, man, it's a mountain. Student loans are a mountain. There's really not much you can do other than work around that mountain. So, and I think Nicole mentioned it earlier that, you have to pay off student loans. If you can pay them off, you'd have paid them off already. And it's what my specific recommendation, based on everything that you mentioned, is apply as soon as possible for two reasons. One, it will give you a real life snapshot of where you are from a buying power standpoint, also a capacity standpoint of where your credit score is as well. And then more importantly, what I have is access to Equifax, TransUnion, and Experian, where I can find out directly from them what you need to do to increase your score. Because a lot of people will say, hey, I'm working on my credit score. And more than likely, everything that they're doing may be effective, but it may not be efficient. So what I always do is look at the most efficient way to do so. And sometimes it may not be paying your credit cards off. It may just be paying them down to half. It may not be, it's very seldom paying off collections. I'll say that for sure. However, just a side note, if you do have any medical collections that are relatively small or something that you can pay off, pay those off, because in July, the credit bureaus will stop reporting medical collections that are paid. So that's a reason to pay off medical collections. But in the end, either I'm going to tell you one or two things. Either I'm going to say, hey, you're ready to buy a home right now, or hey, this is what we need to do in order to get you into a home. And we'll create a plan. I'll make Nicole aware that, hey, and like you said, I don't even put time frames on it, because it depends, one, on how aggressive you are, two, how things can move on our behalf to get some things removed from our credit as well. So I never say it's going to be 6 months or it's going to be a year. Some situations I know just from the way credit works, it's going to be at least a few months. But in the end, the best thing to do is get a plan right now. And then Nicole, she'll know, one thing, she's always on me about organization and follow-up. So reason being, because she's awesome at it. So she'll be sure to keep, touching base with you, just to keep it on your mind, to make sure that, hey, you know what, we get caught up in that grind. So, and we forget about, sometimes it's, we're either looking at the end game or we're looking at it right in front of us. It's hard to keep an eye on both. So what she does is helps you keep an eye on the end game.
That's right. Because ultimately it's your goal to own a home. Therefore, you have to do whatever it takes to get into the position to do that. And whether that's getting your credit straight or saving for your down payment. And that's a balance you have to have, because in this industry, you have to have money down. You have to have money for home inspection. You have to have money for closing costs. So generally, you know, for down payment, I would say 3.5% will be your minimum goal. There's some expenses for home inspection. You know, they range from $400 to $600, just depends on what type of home inspection. And then there's some broker fees in there. And that's a payment for the end. But out of pocket expense is your home inspection. You have to, you know, pay that the day that person's coming to inspect the home that you're potentially going to buy. So those are cash money you have to have. And the down payment, yeah, you have to have it, and it has to be seen. Where's it coming from? And then also your closing costs typically are what, 3 to 4%, Barry? Just to keep a figure in your mind. So if your house is, say, $200,000 loan, let's keep 3 to 4% for your closing costs. So you have an idea in your head. So 3 times 2 is 6,000, another 6,000, that's 12. Let's just say you need 13, 14,000 easily accessible to make this happen just on a $200,000 loan, for example. But as an agent, what I like to do is define what you're looking for, your needs versus your wants. So basically, we're all going to have a dream list. Let's just say of 10 things we truly want in a home, but I have to pinpoint your top 5 that these are deal breakers. For example, if you have a pet and you know you need a yard or you need a fenced-in yard, that might be your deal breaker. You have a nice car, you want to protect it, you want a garage, that might be a deal breaker. You have a big family, you want a nice kitchen, you know, that could be a deal breaker. There's different things, and it's personal between you and your wife. You know, what are deal breakers for you guys? If your daughter's still in school and you want to stay in that school zone, that might be a deal breaker. So, you know, there's different things you're going to share with me, but I have a whole conversation with you where we go over every detail. So that's part of my job. The next thing is to teach you about what's going on in the market. And right now the market is a little more challenging. So you have to, you know, make a list. We have to go and look at houses, but really ultimately you have to be able to make a decision quite quickly. You don't get to decide in 3, 4, 5, 7 days if you like the house, because that house will be gone. It's just the way it is right now. So I have to teach you about that. And then I have different strategies on how to win offers. And one of my strategies is actually teaming up with my loan officer and having him call the listing agent and letting them know that this buyer is solid. And it makes a difference. I was texting Barry on a Sunday night saying, man, I'm about to put in an offer. Do you think you can reach out to this agent? He did it. And it was like 9 o'clock on a Sunday night. I'm like, I don't normally like messing around with people on their downtime. But like he said, we're self-employed. We don't really have downtime.
I was at dinner with my wife and I say, hold on. And thankfully my wife works with me. So she said, make the call. And I called the listing agent up and we got the deal.
We got the deal. And you know what? It was a VA loan, which in this market, for some reason, people are shying away from VA loans. So I felt so good that with my help and with Barry's help, we got this buyer a house. And I asked that listing agent after, what was it? And she says, one was the fact that Barry contacted her. That made a difference. So when you know these strategies and you have a team working these strategies, it makes a difference. The next thing I do as an agent is I refine your search. I start out really broad, and I want you to see the scope of what's available in your price range. Then we'll narrow down things as we go. If we have to narrow down neighborhoods because you want to live in a specific neighborhood, we'll narrow it down. But the slimmings could be smaller. And right now, you're not getting as much for a house as you think. So for example, if your budget's 200,000, you might have to spread your zone out a little. You might have to tweak your budget by 10,000 or so, or you may have to consider coming out of pocket and going a little bit over. But that's all a personal thing. I go over all my strategies with you and let you know these are your options and where do you want to go. Once again, I mentioned my app. It's a great tool. I suggest, if you want it, I'll text you the link, and it's a great way to really see what's going on in very, very close, hyper local areas. So you can see even street by street what's selling and what they're selling for. So who has been looking at houses? Have you been looking at houses online at all, Prentice?
Periodic. I love the aspect of real estate. So I'm always looking to see, okay, this particular area here costs a little bit more. This over here, but then I have to, again, with my daughter, I got to look at the school, the surroundings. So I kind of have knowledge when it comes to, okay, well, not with Jacksonville, but just in particular, like how I'm going to narrow down what I'm actually looking for. Because for one, I have my family, and I love my family, and I can't put them in an environment where, okay, with dad, he's going to work, and then I have, guys hanging out or doing whatever they do, because they do what they do. And so, and I understand for the most part, you're going to have to pay for your safety. And things happen, it's crime, it's nonsense. They go on everywhere. But I can't have my crew in the hood. I can't do that because I love them, right. and that's my family. That's what keeps me going, keeps me motivated. And it will hurt me to say, well, I'm going to go purchase this $280,000 home, but 2 or 3 blocks over, it's shooting and everything going on. So that's, I wouldn't want that for them. So, in reference to have we been looking for homes, I'm always searching that internet. I'm always on Zillow, always looking in different real estate businesses as far as Keller Williams. I'm not too familiar about any other real estate agencies other than Zillow and or Keller Williams in regards to Florida. But I knew when I was back at home, we had Century 21. We had a host of those real estate agencies. But looking for a home, Ms. Smith, I'm always just looking to see what's out there, what's available. My wife and I periodically, we might get up and we might just ride just to see or look at the area and say, well, babe, I don't know. You know what I'm saying? It's we can't be around these party stores. I don't care how much how less it is. I have to pay for their safety, and that's what I'm willing to do.
That's right. And a lot of times people, when they're looking at houses, they're looking at layouts, the space, location, like you said, the schools, how far it is to work, and the features and amenities. And once we narrow down to what area you like, and we start looking at houses, I look at things differently because I am your professional. So I'm looking about how does this house compare in size of term, about the potential resale value. I'm looking at, is there leaks in the roof? Do I see any type of damage that you're not looking for? Can I smell mold, for example? Do I see cracks in the foundations? I'm looking for things that you normally as a buyer pay attention to. So my eyes are like trained to look for different things. And I'm also a designer. So I also look, in the aspect of, will this house be functional for you? Will it work for all your needs as far as how many people are going to be living here? Who's going to be working out of the home, or is everybody going to be out of the home? I look at all kinds of things, and lifestyle. If you needed a yard and there's no yard, I'm going to remind you, hey, this one doesn't have a yard. So I have to be on my toes looking at all different things. And then once you find a house, I also have to look at, is it priced right? What are the other houses have sold lately in that neighborhood? What are the comparisons? Is this priced in a fair market value, or are they overpricing it and hoping, someone will just pay for it? And I'll let you know, okay, this house, it's about $10,000 over, or hey, this house is priced pretty good. Oh, this house is a little under. They might be looking for people to bid it up. There's all different strategies people have when it comes to marketing their home. Because the market we're in, people are sometimes marketing it very fairly, and then others are overpricing it. And then you'll see them start adjusting it every 2 weeks because they know they're not getting any takers. Even if people think everybody's desperate, they're not that desperate. So it is interesting to start seeing, oh, look at that house just went down 3,000. Oh, it went down another 5. Why? Because they knew they were outrageously priced. So I always look at the numbers too. So condo or townhouse, there's reasons you don't buy a single family home. Sometimes the pros to a condo or townhome, one, you get a lower cost per square foot. You have no yard work and no home maintenance. Sometimes there's amenities such as swimming pools and playgrounds. And typically you're within a community, so you really get to know your neighbors. Some of the cons, your shared ownership. You only own a space. You don't actually own the ground, you just own from the foundation to the roof. You don't own anything other than that. You typically have homeowner fees and shared maintenance costs. There's usually a board of directors, and there's a lot of rules, and you have to follow the rules. Another thing people don't, know, even in some homes where you have HOA, you have HOA fees, and those fees, if they're not paid, you'll get a lien on your house and you can get foreclosed on, whether you're in a condo or a townhouse. So you have to always pay your homeowner HOA fee. So new construction is an option. One, it's new. You get warranties. In some cases, you get to pick a lot. You get to pick features and designs, and you get to lock in a price, and you get a good deal. Now, a lot of this has been changing lately because of how things are with the supply chain. Builders are making houses, and that's it. You're not getting choices. And some builders, even if you're buying it, they're not locking in the price. By the time you close, your price could hike up 10, 15, and 20,000. And you got to be really careful with that, because you may not even qualify for your mortgage at that point, or your loan. And I've heard of these, and you're signing the contract, and I'm reading the contract going, what do you mean you have the right to raise the price? And they do, and they'll always say, oh, but we don't ever exercise this. Yeah, until they actually do exercise it. I've heard of people waiting their 6, 8, 10 months for a house. It went up 10, 15, 20, some $60,000. The price went up. They had to walk away. After all that time, they had to walk away. It's happening. It's a little crazy right now. So the cons of that, like I said, you don't know the firm closing date. You're at their mercy. there may not be any amenities. If it's a new community, sometimes it takes grocery stores and different things years to be built in your area. So you might have to go farther. You might be like on the outskirts and you have to drive what I call the country mile to actually get to the house. And then sometimes the whole neighborhood's under construction. So you're dealing with the dust and all these noises of big, huge trucks and all this pounding constantly. So there's all kinds of, reasons that it's a con. That's up to you to decide what outweighs the pros or the cons for you. But if you do get in on the beginning, and because of all that noise, typically by the time the end of that community is finished, you have so much equity, it's crazy. I've heard of people buying in the first phase, and by the time it closed, they had $100,000, $200,000 in equity. And typically these builders right now, they're only releasing 2 to 3 homes a week or even a month that they're going to sell. And each time they sell those 3 and they release the next 3, their pricing is going up about $3,000 every third home that they sell. It just keeps going boop, 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 boop. So your neighbor might have bought it for say 300. By the time you buy it, it's 450 because it went up that many increments for the exact same house, the exact same community. It is what it is. There's nothing we can do about it except accept it. The next step is step 4, make an offer and negotiate. So once you find the house you like, that's what we do. We look at the price, we see if it's worth it. We look at terms. Typically, right now, a lot of people are asking for different types of terms. They want no contingencies. Well, guess what? I will never let you buy a house without a home inspection. Ever, ever, ever. I don't care if it's cash and you don't even need a loan. You still want a home inspection, even if it's for your own benefit, to know what is wrong with that house. Always get a home inspection. The next thing is some people are needing to lease back their house. So they're selling it to you and then they want to rent it back from you after closing because their future house isn't ready yet. And this is really common right now. So if you're a little more flexible and you're willing to do that, they might take your offer over someone else's who even offered them more money because you're actually meeting their needs. So it's something to kind of even think about, being flexible where you're willing to do that. And typically I think the loan will only allow for 60 days. Am I right, Barry? Most loan officers will only let you lease back for a max of 60 days. Yes. Yeah. So, and pretty much everybody knows that, but you have to write up a whole separate contract for that. It can't just be their word and you're going to take their word, because basically then they're living in your house and they're renters and you're their landlords. So you have to come up with a whole new contract for that situation. It's going on and it's happening all the time. Step 5, as I said, inspection and repair. Once you get your house under contract, most contracts we do 7 to 10 home inspection period. That means you hire the inspector, he comes and inspects it, then he gives you the report. What I say with this is don't sweat the small stuff, okay? You got to look at the big major issues. If the roof is bad, if there's cracks, if the windows are failing, if plumbing, electrical, if there's mold and termite issues, these are the things you really concentrate on. I come back and I give them a whole list of what you want fixed. They may come back and say, look, we'll fix it, or we'll give you some cash off and you fix it later. It just depends on the issue. Sometimes your loan officer won't allow you to even close on that house if it's a major issue because you can't get insurance. So everything's negotiable, but we all have to, get emotions out of it and look really at the major problems. You don't want to nickel and dime people to death because it's just not worth it. Oh, that light switch is cracked. Come on now, you can go to Home Depot and get your own light switch. Just get over the little stuff. about the big stuff. And if you concentrate on the big stuff, most sellers will oblige because they don't want to go through this process again. And they know if you're thinking about it, the next buyer is going to be thinking about it. So it behooves them to get this stuff taken care of and get it resolved and get to the closing so that they can move on to their next phase of their life as well. So step 6, you close and you become a homeowner. Now, this is the most exciting thing. Most exciting. Your closing costs 2 to 3% of your loan. I would say 3 to 4%. Things seem to be a little higher these days. When you go to buy a house, you have to have a 1% earnest money deposit, but that goes toward your purchase price, toward your loan. You have a period of time when you're in the inspection period where you can actually walk away from that contract. You can walk away if you change your mind for any reason. And if you find that during the inspection, the house is a dud, it's a lemon, you're like, heck no, I don't want to deal with this, you get to walk away. There is a survey cost. There is some miscellaneous fees. And then you have to get your homeowner's insurance. So you have to start opting for home insurance and you have to have some reserves. So when I say reserves, that means I don't want you to be house poor. I want you to have $2,000-3,000 in the bank just in case something breaks. I also recommend a homeowner's warranty. So you can buy a warranty that'll cover some major repairs. And I recommend those. You know, they can cost between, you know, $500 and $500, $600, $800, just depends. But there's different warranties. I recommend them because they will do repair and replacement of major appliances, roof, HVAC, all different things. They're really worth having, but never be house poor. Always have a little bit of money in case a whoopsie daisy comes up, you know, hot water tank, something comes up. You want to have some money and not be in dire straits. So I always do the final walkthrough, if I can, the morning of the closing date. And that's because you never know what can happen. I've heard of some people where they've closed on the house. They did it the night before. They show up the next day and the house had burned down. And now they own a burnt down house. It's just the thing. I've heard it. And it wasn't just hearsay. It was someone I know that happened to. So now I'm like, okay, let me use wisdom and learn from their situation. If we can, we walk that house the morning of, you see, and make sure that they left that house in swept condition. They didn't, you know, put holes in the walls before they left while their movers were moving their heavy lifting furniture, that if the fridge and stove was supposed to be there, that it's actually there. You know, these things you got to make sure. And another one of my closing, we asked for the washer and dryer. When we showed up to do the walkthrough, there was no washer and dryer. I'm on the phone with the agent going, where's the washer and dryer? Oh, no, we made sure that washer and dryer wasn't conveying. I said, well, I checked it off and you signed it. So guess what? That agent, because that was her mistake, she had to buy my customers a washer and dryer. So she was writing out a personal check at the closing table to them because I represent my buyers. I'm sorry that she had to do that, but she didn't read her paperwork. That wasn't on me, that was on her. So even as a seller's agent, I'm always reading the paperwork. I'm making sure that what you say is what I say. Yep, it all makes sense. And then I have also a transaction coordinator that even follows through and backs up everything I'm doing, saying, oops, you missed that. And she's doubling back. So I have more than my eyes. I have a team of people that are helping me. And I think that was my last one, but let me just see. All right, here we go. When you come to the close, what do you need to do? You need to have your certified funds. You have to have evidence of insurance, and you have to bring your you know, license or some sort of valid ID in case they ask for it. Now, typically, people are doing a wire transfer on the day of close. If you're banking entity takes a long time, or they only do wire transfers once a day, you might want to have that scheduled first thing in the morning. So by the time you get to closing, it's good to go. I was sitting at a closing table for hours and it didn't go through, and we couldn't close till Monday because it was a Friday. And it is what it is, because it was their bank and their bank just did what they wanted to do. So now I'm like, look, prepare in the morning, call your bank and say, I want this, 10 grand or whatever wired now. But you have to follow the wire instructions so there's no wire fraud. Whatever your lending agency sends you, their wiring transfer, the title company, you only follow their links, because it's very, very, very secure that way. Otherwise, you could get infiltrated. And then at that time, once all the money's transferred, you sign all the settlements, the transfer of title is clean, and you get the keys to your new home, and boom, you're a homeowner. That's how it works. And once you're in your home, I want you to maintain your home. I want you to take care of it with love and care. Make sure if there's any issues, you solve those issues, because small issues can turn into big issues. Make sure you keep your file. Make sure you keep all your warranties on file. And when you go, and if you ever need to sell that house, it's going to be worth something because you took care of it. So my question is, do you have any questions? Do you have any ahas? And when do you want to get started?
Well, I currently don't have any questions. And my wife, she's currently out doing the Walmart or Target thing. And I did bring you up in conversation as, babe, I was up at Target and I ran into a real estate agent, and she said, you're always running into somebody, but it was a positive thing. So what I want to do is just sit down with her and let her know. And then, well, what should we do next? What should we do afterwards? Or where's our checkoff list at? And how we're going to approach what we're trying to accomplish. And so I know school is getting ready to let out in a few more weeks. In a few more weeks. So I'll have more time to really just focus and get some things under control. So again, in reference to purchasing, maybe in the next 4 to 5 to 6 months, but I need to start working towards that goal ASAP, like Mr. Young said.
Yes, and I will share with you Barry's information. So if you want to get a real good checkup on your credit and get a game plan together, because he can tackle, the area where you need to concentrate. And it's important. If you know that, if you have a struggle here and there, he'll give you the best plan.